Have you ever wondered how you can really measure the total return that the company is giving to its investors? Now, beyond the well-known dividend and beyond simple stock price appreciation, there is another metric that captures almost everything you want to know about. Welcome to the fascinating world of shareholder yield. First of all, let's unravel what this term means. Shareholder yield is kind of like the Swiss Army knife of investment metrics. It combines dividends, share buybacks, as well as debt reduction in a way that's going to give you a much more comprehensive view of how much value the company is returning to its shareholders. Think of this as a simple panoramic snapshot of the company's dedication to you, the long-term investor. Now you may ask me, look Lincoln, why should I care about shareholder yield? My answer to this is simple. Well, imagine that you are trying to evaluate two companies. Both offer dividends, but one company is also buying back its shares, reducing the number of shares out there and potentially then increasing the value of the shares that you as an investor own. Meanwhile, the other company is doing nothing of the sort and in fact may even be adding shares. Now clearly you're going to get a better deal from the first company. And this is where shareholder yield comes into play. It lets you quickly assess what is going on. Now furthermore, in a world where companies are drowning in debt, as we see today, those companies that are actively reducing their liabilities are making a very clear, strong statement. They are signaling that they have strong financial health, discipline, and they have a very forward-looking approach. This debt reduction is also an important part of shareholder yield, and it gives you insight into the company's broader financial strategy. But here, my friends, is the golden reason why I think you should care, because it's about clarity and it's about confidence. Shareholder yield gives you the clarity because it amalgamates and brings together multiple factors into one definitive metric. No longer do you need to juggle numbers or scratch your head about conflicting data. With shareholder yield, you get a clear picture, one number, a single number that is going to speak volumes to you about the company and about their overall approach. And confidence? Well, that's simple. By relying on shareholder yield, you are basing your investment decisions on a metric that takes into account not just immediate returns, but also the long-term strategies that the company is employing to reward the shareholders. It's like having a secret weapon in your investment arsenal that empowers you to simply make so much more informed, so much more holistic, and so much more strategic decisions about your investments. So to wrap this up, my friends, investing is not just about following trends. It's not about following your gut feelings. It's about giving yourself the knowledge, giving yourself the understanding, and using the right tools. And here, shareholder yield is one of those key tools. It gives you a holistic view of the company's commitment to the investors. Focus on it, and it will help you to ensure that your investments are not just a spur-of-the-moment decision, but instead they are informed choices that you make in companies that truly value you and the other shareholders. In the grand chessboard that is investing, knowledge is power. Understanding shareholder yield, that's like gaining a queen in the middle of the game of chess.